मतलब दिस इज वेरी स्ट्रेंज कि लड़की लोगों ने कैमरा ऑन करके रखा है एंड बॉयज आर ऑल कैमरा ऑफ। यूजुअली लड़कियां कैमरा ऑफ रखती हैं। सूरज, अयान।
2 मिनट सर, बस पानी भर के आ रहा हूँ।
रॉयल स्टेयर बोलने से पहले ओपन कर रहे हैं। अनिरुद्ध, वो तो वैसे आज टाइप कर रहा था, मेरे को लगता है बोलेगा भी नहीं। अयान, वेलकम बैक। तबीयत ठीक?
हाँ सर।
फिर कहाँ गायब थे?
सर कल
हम्म।
सो गया था।
ओ भाई साहब, ये तो एकदम ले भारी। गुड। Okay, so basically, yesterday what we were discussing was about inflation. Inflation can be of two types: demand and supply. Now, ultimate cause of inflation is the rate hike because commodities gets on the higher side. Now, if it is because of the supply side, so do we have to hike the rate? If the inflation has been caused because of the decrease in supply, Ayan थोड़ा सा confused होगा तो थोड़ा सा let me see if I have that particular page with me. Demand supply, हाँ, correct. So let me share it with you. Ayan, just a quick brush up ताकि उससे तुम आगे बढ़ पाओ. Inflation इकोनॉमी में दो टाइप से होता है. Either demand has increased, demand has become more than supply, और supply has become less than demand. देखने में दोनों स्टेटमेंट सेम लग रहे हैं, बट द डिफरेंस इज इन first statement, your supply, let's say it is 100 units, it stays 100 units, but demand has increased from 100 units to 101, 102, 103, 110, like that. So demand has increased beyond the supply range. In second statement, demand stays constant, that demand is still 100, but supply, which was still now 100, now it has started reducing. Now there is a cut in supply. Now, example of this supply related inflation is your vegetables, tomato, onion. Supply किसी भी वजह से cut हो सकती है. It could be because of you can say the bad manufacturing. You can say loss of the finished good products. It could be because of the loss of labor. Anything, right? तो सप्लाई कट कर दी तो जिससे तुम्हारे टमाटर के प्याज बढ़ गए, बिकॉज फसल खराब हो गई, टमाटर के प्याज बढ़ गए. टमाटर के रेट्स बढ़ गए, नॉट टमाटर के प्याज बढ़ गए, टमाटर के रेट्स बढ़ गए. एंड अगेन प्याज के रेट्स भी बढ़ जाते हैं. अनियंस वो तो रेगुलर है, बढ़ता ही है. अनदर ग्लोबल कमोडिटी इफ यू वांट टू टॉक अबाउट देन व्हिच इज द ग्लोबल कमोडिटी व्हिच डज इट? क्रूड. क्रूड में they always reduce the supply or increase the supply to fluctuate or manage the rates, right? Demand side, if inflation is rising, that means people are having lot of surplus money because of the economic activities and they are now demanding more, right? So interest rates are adjusted to control the inflation. Now, to control the inflation on the demand side, what is actually done is, when the inflation is because of the demand side inflation, then interest rates are risen. Interest rates को बढ़ाया जाता है so that inflow of funds or surplus investable funds in the hands of the investors lies at lower level, right? So in that case, what happens is your loans become costly. Now, whenever economy is rising rate or declining rate, or for that matter changing rates, that particular economy's growth is also hampered, or it also changes the gear. For example, if your interest rates are rising, then definitely the manufacturing company will not be able to sustain higher interest rates, and they might go into defaults, and a lot of companies might fail if demand doesn't increase much beyond to what you can say, the negotiate the effect of nullify the effect of inflation, then definitely companies will not be able to survive. अगर आज कोई 100 रुपए की टॉप लाइन कर रहा है, 100 रुपए का धंधा कर रहे हैं, 100 रुपए का अर्निंग कर रहा है, रेवेन्यू कर रहा है, out of which let's say 70 rupees expense is fixed and the person is paying 30 rupees of interest. 70 rupees of expenses, other expense, and 30 rupees of interest expense. Now all of a sudden, if the interest started rising, the expense of interest will also start rising. So 30 से 31 हो जाएगा, 32 हो जाएगा. So in that case, what will happen? He's earning 100 rupees, but he's spending out 102, 103 because 70 rupees of expense will not change. Rest 30 rupees because of interest is changing. So ultimately he's going in losses. So he is actually putting up money from his own pocket. How long he can survive? Till his pocket has money. And that is not a longer period enough, because we are talking about a corporate. It is not an individual, it is a corporate. So that cannot survive. So what happens is, in that case, lot of companies go default or go bankrupt when interest rates are rising. But in case of falling interest rate, what happens is the same interest, it starts getting reducing. The same interest expense starts getting reducing, like 28, 27, 26, like that. So the person who was giving out money for balancing his expenses, which includes your interest expense, now is saving in the same revenue. He is now saving money. So if the person is saving money, what he will do is he will try to either increase demand, or he will try to increase his investments, which ultimately will increase demands in other side of the product, right? Now, thing is, this considering the scenario in 2020 March, what happened is, when we went into the lockdown, economy was at halt. It's not only Indian economy, all over world economies were at halt. यानी सब जगह पे economy का काम रुक गया था. We were not going to plants, we were not going to offices, so manufacturing stopped. Only service industry was working from home. Manufacturing cannot be done at home. We cannot produce steel at home, right? Employee who is working in the steel plant cannot sit at home and produce steel, cannot produce cement, cannot produce motor vehicles, and like that. So manufacturing units were closed, and so there was no economic activity for them. Now, since there was no economic activity for them, then the corporates were not even able to earn what they were not able to earn. They were not able to earn income, but they had expense, because salaries they were giving. We can what you can say, discuss on this, that the salaries were given to some, were not given. It was 50% or whatever it is, but ultimately there was the fixed expense which was going out. For the corporates who had rented out their properties, they had to pay the rent. The machineries fixed maintenance was there. Then utility bills, minimum utility was to be there. Then raw material cost, a lot of things were there, for which they had to pay a fixed income or fixed cost. Now they were not earning, and they had to pay fixed costs. And considering and gauging the situation, what the government did is, they started reducing rates, and they reduced rate drastically. And secondly, they gave them a interest holiday for 3 to 6 months. In this, what happens is, all of a sudden they now started getting more money in the hands. How? Because businesses from work from home started coming up, and lockdown was there for 1.5 month, after which they started doing their activities, though not in much of the full 100% cycle, but again 50 to 60% or 60 to 70% cycle they started working what they were doing prior to COVID, right? So income started coming, generating, and they have reduced their expenses. And on the top of that, the interest expense have reduced drastically first. And for 6 months, so 6 months or so, the interest expense was waived off. So they saved a lot of money. Now, when they saved a lot of money, they pumped this money into the economy directly or indirectly. Directly by investing, or indirectly by demanding more and more products, which could be luxurious products, which could be anything. So the funds in the hand of the investor, or funds, the surplus funds in the hands of the end user, creates inflation. So when they started demanding, the inflation kept on rising. So after 1.5 year or two, we were in the situation where we actually have to reduce inflation, because inflation has gone much higher. To control the inflation, the government now started rising rates, and this we have been looking at for almost now 1.5 year. Now, as of now, we can say that government is at the halt of increasing the interest rates. Guys, just a moment. So basically what happens is, the government has started increasing the rates now. At this present moment, we are at halt. That means interest rates are now at a peak level. Now they need not be risen much. And from here, we have either two sides. Either the interest rates will go down, or the interest rate will stay there, right? When interest rates were rising, so what was happening is that investors were getting less surplus funds in their hands to invest. then economic activity was being changed. It is a usual scenario. Now these things, the rise of simple interest rate or the fall of simple interest rates gives us a lot of indication that how the economy can work, because the change in the interest rate changes the overall economic condition, overall economic situation. Now, there are two statements about the markets. One is about the debt market, one is about the equity market. So equity markets, we say that equity market, what price valuation right now we are seeing in the market, that is actually the future value of the equity markets. If we are seeing Nifty at 19,800 as of now, so this is the future prospect of Nifty, what the future prospect of the market, what investors are looking at, that market should rise and they are well placed to go up. This is the future value what we are looking at. And in debt market, whatever action you are taking today, the results will be shown to you after 3 months or 6 months, maybe a quarter or two, right? So whatever action we take today, the impact of this action comes about after quarter or two. Now tell me one thing, just one question. Why do we say that the impact of the actions in debt market or the fundamental market, we can observe only after 1 or 2 quarters? Why is that so? If I'm being an RBI, if I'm rising interest rates and if I'm changing interest rates, but the impact of this change, rise or fall in the interest rates can only be seen after what you can say 1 quarter or 2 quarter. Why is that so? Anirudh? Anirudh, you're there? Yes. So tell me, what is the impact? I mean, why do we say that the impact is seen after 1 quarter or 2 quarter? Why is that so? You're not able to unmute yourself or what? Having microphone issues. Mobile or laptop? Laptop. So you can switch, log in from your mobile also, na? Mobile will not have that issue. I've given link on your WhatsApp, so you can log in from mobile. Elsewhere, by the time, would you try to answer that?
So can you repeat the question?
When we say that whenever there is a change in interest rates or whenever there's an action in the debt market, we see the reaction in after 1 or 2 quarters. Why is that so?
So usually because companies raise debt to usually fund a project, a new project, or maybe an expansion plan. So because of that, it takes time for the action plan to take place, and then for an wait for an outcome to come. So
Very close.
that's why.
Very close. Ananya ma'am?
Sir, I'm not sure, but because it takes time to digest the fact that demand and supply, it takes time to reflect
So,
that.
or maybe when there's a new project, it increases employment opportunity, and then because of that, there is more of an inflow in the market.
Very close. I mean, your answer is very close, but not exact. But still, it's quite close. Ananya ma'am is saying like that कि breakup हुआ है अभी अभी तो पता पड़ने में 2-3 महीना तो रोने में ही निकालेंगे, उसके बाद ही पता पड़ेगा कि क्या हुआ है, right? Shireen
So,
ma'am?
yes.
Sir, I'm not very much
Just
sure.
a simple thought. Okay. Companies की balance sheets and all, have you read about it? Balance sheet, financial statements. So what is
Yes,
the minimum period you look at the balance sheet of any company?
1 year,
Minimum period I'm talking about.
1 quarter.
1 quarter.
1 quarter. So
Yes.
anything, if I have, let's say today interest, RBI declared the interest rate will be coming down by 50 basis points. Banks will also reduce the interest rate by effective tomorrow, maybe in a day or two, or maybe max 3 days, or let's say 1 week, right?
Mm-hmm.
So the same impact will go to the corporates within a week or within 10 days. When we are talking about a quarter, that means 90 days we are talking about, correct? If you're talking about 90 days, so in 90 days, the impact of this particular interest rate will be absorbed. whatever activity corporate is doing, that will have the impact of these 90 days, the interest rate of these 90 days, plus or minus, negative, positive, that is different thing. But how will we know that what was the impact? Only after the company gives or declares result. Banks also takes their quarterly results. If they are listed on the stock market, then also they have to declare the results in a quarter. So in a quarter or two, we can absorb or we can understand what actually has happened or what is the actual impact of that debt market. Impact takes instantaneously, but to uncover that impact, it takes time for like 3 to 6 months, because unless we see the new balance sheet, we will not be able to gauge what has happened. That's why it is 1 quarter. But in equity market, everything is discounted. Future is also discounted. What we are trading today is a discounted future, right? It's not the present value. It is a discounted future value. Correct? So equity markets give instant reaction. They understand ki, okay, for example, now how they both are related. If I have RBI has said that they will be reducing the interest rates by 50 basis points. Let's say tomorrow RBI comes and says that interest rate will be reduced by 50 basis points. Now, capital intensive industries like steel industries and your cement industries for that matter, shipbuilding and bigger industries who have huge loans, like 10,000 crores of loans. If 10,000 crores of loan is there and let's say 9% is the interest rate. So 9% of 10,000 crores is how much? 900 crores, right? 900 crores if I'm talking about, so almost 7 crore a month, almost 7 crore a month, a little higher than 7 crore or 7.5 crores a month, right? 7.5 crores a month interest is being paid by those people, right? If interest rate is reduced by 0.5%, there will be a drastic change. Probably we all sit together, our salaries all sit together, can be free for that company. So almost 8-9 people would start working for that company free of cost without any charge, because just because of the reduce in interest rate. If 8-9 people are working free of cost for the company, then definitely company will be producing much more quantity, company will be doing much more efficient. Now equity market understands these things very well. Interest rates have reduced today, they will be affected in 10 days, and then within 10 days the company will also start getting extra cash flows, because interest outgo will reduce, because of which there will be the increase in production, and increase in production will ultimately lead to increase in sales and ultimately to the profits. So this company right now is trading at 100, but within 3 to 4 months this company's valuation should be somewhere around 200, and they now discount it. If after 3 months the value of a company is 200, so what should be the discounted cash flow? That means what should be the discounted value? What should be the present value? So FV or PV is equals to FE into 1 plus R raised to power T, right? ये फॉर्मूला शायद आप लोगों ने पढ़ा होगा, डिस्काउंटेड कैश फ्लो का पढ़ा है कि नहीं पढ़ा है? प्रेजेंट वैल्यू, फ्यूचर वैल्यू, have you studied?
Yes, sir.
So we can find out ki future mein if the value would be 200, then what could be the present value? So equity market discount the future value of that particular equity, and practically we see the value of that equity presently, and the market rises. You understand how they work in sync? Debt markets actual action will be seen after 3 months, because after 3 months you will be able to see if the company was actually benefited or not, because company will release its reports after 3 months only. But equity market says that it will. So there's a little speculation into it that it will or it should rise to that level. And if after 3 months the value of that equity is around 200, then the present value of the equity should be somewhere around 130. So from 100, that particular stock goes to 130, because the present value of that stock is 130 as per the future value of that stock after 3 months. ये समझ में आया? गाइस ये समझ में आया कि कंफ्यूजिंग खिचड़ी बन गई? शिरीन मैम, अनन्या मैम, वो तो अपना कैमरा ही ऑफ करके चले गए.
Yes, sir.
क्या यस सर? कैमरा ऑफ करके चले गए कि समझ में आया?
समझ में आया.
समझ में आया?
Sort of.
नॉट येट.
सॉर्ट ऑफ सर, मतलब मेरे को थोड़ा सा ब्रश अप करना पड़ेगा इस कॉन्सेप्ट में दोबारा.
नहीं तो ये तो अपन अभी स्टैंड अलोन पढ़ रहे, इसमें क्या समझ नहीं आया? चलो रिपीट विद मी, क्या समझ में नहीं आया? व्हाट यू अंडरस्टूड, वुड दैट टेल मी दैट.
तो फ्यूचर वैल्यू और प्रेजेंट वैल्यू में मतलब थोड़ी सी कंफ्यूजन होती है अभी भी.
ओके, फ्यूचर वैल्यू और करंट वैल्यू में कंफ्यूजन होती है।
हाँ मतलब वैसे तो तो थोड़ा
हम्म,
ब्रशअप करना पड़ेगा मेरे को इस कॉन्सेप्ट में।
चलो सिंपल सा गूगल के थ्रू बताता हूँ ताकि आपको इजी रहे। हाउ
जी
टू कैलकुलेट present value. This is the formula. Now here PV is equals to present value,
यस सर।
FV is equals to future value, R is rate of interest,
यस सर।
N is number of times,
द अमाउंट इज कंपाउंडिंग।
correct, right? So what happens is here we are saying the future value of the equity is 200. That means we know after 3 months the future value would be 200, correct? Now, if we have to find out ki what is the present value, because I said equity markets discount the future, equity markets discount everything, and whatever we are seeing right now is actually the future price. But actual future price is 200, which is after 3 months. We cannot take 200 right now, right? We have to calculate the present value. कि अगर like we might have heard from our parents कि हमारे जमाने में तो 10 रुपए में पेट भर के खाना मिलता था, right?
यस सर।
If we calculate that value, if we calculate the present value of that particular thing, या उस समय पे जाके हम लोग अभी future value calculate करें, so we can find out कि उनके उस समय पे 10 रुपए आज 78-79 rupees के बराबर है. That we can do because we add on inflation. Every year inflation was adding,
यस सर।
correct? So if every year inflation was adding, let's say by 7%, then definitely we can say कि अगर वो 10 रुपए में उस टाइम पे खाना खा रहे थे पेट भर के, और आज अगर हमें 50 रुपए में खाना मिल रहा है पेट भर के, so value of that 10 rupees is now almost equal to 80 rupees, correct? So 10 रुपए में जो खाना खा रहे थे उसकी वैल्यू आज 80 rupees है, और हमको वही खाना आज 50 रुपए मिल रहा है. तो आर वी ईटिंग चीप और आर वी ईटिंग कॉस्टली?
तो पास्ट के कंपैरिजन में तो थोड़ा कॉस्टली है, मतलब 10 रुपए की वैल्यू हम
एब्सोल्यूट, सी एब्सोल्यूट वैल्यू में कॉस्टली है. अंडरस्टैंड दिस कंसेप्ट कि एब्सोल्यूट वैल्यू में कॉस्टली है, बट वी डोंट टॉक इन एब्सोल्यूट वैल्यूज, राइट? बिकॉज अगर आपने लेट्स अंडरस्टैंड दिस पर्टिकुलर थिंग इन अ डिफरेंट वे. योर फादर सेड कि 10 रुपए में वो पेट भर के खाना खाते थे. लेट्स से दिस इज समथिंग अबाउट 20 years बैक. सो वो बोलते हैं कि उन्होंने उस टाइम का 10 रुपए, बिकॉज दैट टाइम 10 रुपी नोट वाज वेरी बिग इन साइज, उन्होंने वो 10 रुपए उठा के अलमारी के लॉकर में रख दिए. नाउ आफ्टर 20 years वो आपको वो नोट दिखाते बोलते कि हम इस 10 रुपए में खाना खाते थे. ये सेइंग कि ओके आप इस 10 रुपए में खाना खाते थे, अभी चलते हैं इस 10 रुपए की वैल्यू लेते हैं कि इस 10 रुपए की वैल्यू कितनी है. हम लोग मार्केट में गए, हमने मार्केट में पूछा इस 10 रुपए की वैल्यू कितनी है. मार्केट का मतलब लोग आरबीआई में गए, तो आरबीआई ने इन्फ्लेशन कैलकुलेट किया. आरबीआई ने कहा कि इस 10 रुपए की वैल्यू जो है अभी इज अराउंड 70 rupees और 80 rupees, करेक्ट?
यस
So
सर।
that 10 rupees at that time is now equal to 80 rupees, correct? Now we are having food at 50 rupees, same food at 50 rupees. So if we just shift our father's era to present era, because to compare we can't compare two different times, we have to bring one time to the other zone. So what we are doing is we are bringing your father's 10 rupees to the present zone. So the
Yes,
10
sir.
rupee is equivalent to 80 rupees of the present value,
यस सर।
right? And 50 rupees is 50 rupees in the present value. So basically your father was eating at the rate of 80 rupees, correct? And we are having at the rate of 50 rupees. Now tell me, are we eating cheaper or are we eating costly?
चीपर।
Cheaper. So this is the way we calculate and understand ki what has happened. If father says no, we used to eat at 10 rupees. Okay, you stay at your place. What we will do is we will bring this 50 rupees to your era. If this is the present value, I mean this is the future value. 50 rupees is the future value. If we compare it with the 20 years back, if I have to compare it 20 years back, so what I have to do is I have to calculate the present value. That means value of this 50 rupees at that particular period of time. So I will take 50 rupees as a future value, and I will take rate of interest as an inflation rate. What is the inflation rate? Then I will calculate for the for 20 years, right? That what the value this 50 rupees had 20 years prior to this. So let's say arbitrarily the value of this 50 rupees comes out somewhere around 6.5 or 7 rupees. For that matter, 8 rupees. So that means this 50 rupees was equivalent to 8 rupees. So you can fairly ask your father that you were eating at 10 rupees, whereas I am eating at 8 rupees. So the saying the inflation has risen or inflation has eaten up the value is not a right way, but ultimately we have to compare. So what we are doing is we are trying to understand the future value and discounted present value.
Yes, sir.
अभी concept समझ में आया?
हाँ.
So in our example, what we are doing is we are saying that when interest rates are coming down, so let's say JSW Steels, which is trading at somewhere around 800 rupees as of now, if RBI start reducing interest rate, RBI says that I will reduce interest rate by 50 basis points. That means 0.5%. In that case, what will happen is the share price of JSW Steel, let's say it rises by, let's say 100 rupees, which goes to 900. So 100 rupees divided by 800, which would be somewhere around 1 by 8 is equals to 12.5%, right?
Yes, sir.
12.5% it went up. Now, that 900 rupees is actually the future value of JSW Steels after 3 months. Now, does that mean that after 3 months JSW Steel will be at 900? No, because there is inflation playing a role. So the value of this 900 at that time will be somewhere around 1100 or 1200, somewhere around, correct? So the equity market, what the equity market does is, equity market says ki right now the value of the share is 800 rupees. But since RBI has reduced the interest rate, which will impact the earning of the JSW Steels, because of which after 3 months, they do some calculation that what will be the impact, because they know the number of employees, they know the production, they know the interest outgo, they know the previous, their returns, the earnings, PAT, everything. And they simply just change the interest rate calculations and they understand ki what will be the extra income which JSW will be generating. And that income, as per that income, they calculate that after 3 months, what could be the price. So let's say after 3 months, they calculated the price of the JSW should reach at somewhere around 1100 rupees. Correct? Now, should they wait for 3 months for the JSW to announce their result and then they take it from 800 to 1100? No, they always keep on improving the rates, right?
Yes, sir.
They keep on changing the rates. I mean, the demand and supply, okay, as per the understanding. So they don't wait. They instantaneously discount that 1100 price, which is a future price, that after 3 months, if it is going to be 1100, then what should be the price at present? So they use this discounted cash flow method, which is called PV is equals to present value is equals to future value upon 1 plus R raised to the power T. 1 plus R upon N raised to the power T. So this tells us that what would be the value of JSW Steel at present, considering the future value after 3 months.
Okay.
समझा?
हाँ, sir.
फ्यूचर वैल्यू इंटरेस्ट रेट कैलकुलेशन से उन्होंने निकाल ली कि इतनी होनी चाहिए एंड उसके हिसाब से अभी प्रेजेंट में कितना होना चाहिए. सो प्रेजेंट वैल्यू एज पर देम इज 900. सो JSW will start rising from 800 to 900. So as soon as it comes to 900, it will settle down, and then slowly and gradually in 3 months it will start reaching to 1100. And as soon as the results of JSW comes out, and if the results changes their phase, if the results are better than what was expected, then JSW Steel will rise further beyond 1100. If the results are not as per the expectation, what the calculation market did, if they are lower than that, then the rate of the JSW will be discounted and will be brought down as per the valuation in the balance sheet or as per the result what JSW has given. Got it?
Yes, sir.
Clear? अच्छे से?
हाँ, sir.
To everyone else? Ananya ma'am?
So,
Yes, sir.
Okay. अनिरुद्ध, अयान तो बोल रहा सर आ गया हूँ, बहुत है, परेशान मत करो, राइट?
हाँ.
हाँ. Ayan really not interested in the subject.
Sir, no. Why?
अयान आज एकदम पूरा सही आंसर कर रहा है. परेशान मत करो. हाँ, परेशान मत करो.
नहीं, I told I got it.
Okay, so this is how these two markets work. Now the thing is, it clearly says that the overall economy or the overall market is being guided by which particular segment? Debt segment. because debt segment is a bigger segment. So debt segment guides the market in much better way, right? In debt segment, when we see that what are the instruments which are traded, then money market is one thing which is being traded at a bigger way. So today we'll be discussing about money market. यहाँ तक समझ में आया?
Yes, sir.
What was that?
Sorry, sir.
No, there was some sound, so I thought ki what exactly it meant. Money market, sorry, I was open with different presentation. By mistake closed. Okay. Money market. So what is money market? We have taken a brief of that. हाँ तो करेंगे लेकिन बताएंगे नहीं. So debt market तो सबको समझ में आया कि debt market में what exactly we do. We majorly talk about the interest rates because debt market is also an investment market as well as a fundraising. Both the markets are fundraising markets. Corporates, governments, banks, institutions, they raise money from these two markets, debt market and equity market. In equity market, they give equities in place of the funds, and debt market, they give the guarantees of interest rates, returns, and the return of the principal, right? So in both the cases, the funds are raised for the development of a corporate of a country. But the funds which are raised in the debt market, they are having a maturity. Since we are talking about interest rates and the guarantee of the returning of the funds, so definitely we will have to fix up certain time period when we will be returning these funds. So this particular time period of returning of the funds is actually called as a maturity. Then maturity, when we talk about it, ranges or it starts from 1 day and it goes beyond 10 years, 12 years, 30 years, 40 years, till 30, 40 years also it goes. So 30, 40 years are the GSEC bonds, GSEC government papers, government security papers, right? So money market, if we, for the definition, if we look at, then money market is a segment which looks after or which deals majorly in the debt instruments which have a maturity almost between 1 day to 1 year. I'm saying majorly. So anything, any debt instrument which is having a maturity between 1 day to 1 year is comes under the money market. Now, if I'm talking about anything, that does not mean I'm talking about the bank deposits. Bank deposits in fixed deposits or the recurring deposits or savings account. No, not those. Anything as in the bigger market where the debt instruments are traded. So debt instruments are traded like if FD, let's say if I have made an FD, can I trade that FD with Ananya ma'am? No, that is in my account. I cannot trade that FD. So debt instruments which are tradable. If I have bought a bond, I definitely can trade that bond with Ananya ma'am, right? So if a tradable debt instrument is being raised and it has a maturity from 1 day to 1 year, that particular debt instrument is comes under the money market. Overall debt market as a subsection which is money market. Now this money market, who does borrows majorly? Now in money market, majorly borrowing happens by I mean the banks are the bigger participatory participations. Banks does take huge participation in the money market. Institutions takes bigger participation. RBI takes a bigger participation. Corporates usually don't come into the money markets. Usually doesn't mean that they don't come, they come, but they don't borrow from money market. Majorly the money market is for the banks and the financial institutions, NBFCs for that, or BFSI sector for that matter, banking and financial sector inclusions. So they require huge amount of fund on day-to-day basis for the mismatch of their liability, maybe for a couple of hours or maybe for a day or something like that. So they trade heavily in the money market. They always keep borrowing and sharing their funds. So with RBI also, they have their arrangements like IRR, CRR, SCLR, all these ratios, liquidity ratios, which they have to maintain with RBI, because of which they have to borrow from RBI also from time to time, which this borrowing range can be from 1 day to again 1 week or something like that. So they participate heavily in the money market. Now, borrowing and lending of short-term funds, that happens short-term we are talking about, then definitely we're talking about the maturity less than 1 year, majorly, right? That happens in money market. Maturity ranges from 1 day to 1 year. It is regulated by RBI and SEBI. Why RBI and SEBI both? SEBI is a regulator of the markets. RBI is the regulator of the banks and financial institutions. Then why both are the regulator over here? I should have put this question in the quiz. Acha, I forgot to tell you. Today 9:30 you all have quiz.
The night.
It is for 15 minutes and it will take hardly 5 minutes, not even 5 minutes.
Okay, sir.
The
Okay.
question has integration like this, that +1 -2. It has
Negative
higher
marking.
negative marking on the higher side. Double negative marking. So I want to see how many people can come on 0. Right? Okay. Back to this thing question. कोई बात नहीं, ये वाला question मैं अगली बार डाल दूंगा. So why both regulators, RBI regulates banks and NBFCs, financial institutions for that matter, in case of lending and borrowing. And SEBI is a regulator for investments. Then why does SEBI intervenes over here? What is the role of SEBI over here in money market?
Sir, because even companies can also borrow and lend.
So borrowing and lending is being governed or regulated by RBI. SEBI doesn't regulate borrowing and lending.
So, but banks are the key main players of the money market. तो उस पर्सपेक्टिव से आरबीआई उनको रेगुलेट करती है, बट जो मार्केट है, वेदर इट इज मनी मार्केट और इक्विटी मार्केट, दैट कम्स अंडर सेबी ज्यूरिस्डिक्शन. तो वहां पे सेबी को आके रेगुलेट करना पड़ेगा. मतलब दैट्स
Extremely close. So the simple word is that we are talking about the investment instruments. We are not talking about simple lending and borrowing. So when we are talking about investment as an instrument, then SEBI has to come in, because SEBI is a body which has been formed in 1992-93 for the betterment of, or SEBI Act came in 1992-93 and it works for the betterment of the investor. So there are certain guidelines with respect to the investment which SEBI regulates. And for lending and borrowing, RBI regulates. So that's why here in money market, both the regulators are there. Fine. So I can easily put this question in the quiz, right? Or maybe I can give an elaborative question on this in the exam. So I'll think upon it. Okay, whether 5 marks or 1 marks, that I will think. Okay. So objective of the money market is facilitate parking place to employ short-term surplus funds. So now what happens is that every bank has a different liquidity. Someone might be having a liquidity of 5,000 crores extra today. Someone might be short of 10,000 crores because of the ratios, fluctuating ratios. Let's say in 2008, now this situation, how the situation can come. In 2008, what happened? There was a global financial crisis, right? What was that?
Markets went down.
Why?
What was real estate market, right?
It was the overall market, but what was the event called? Global recession. Because I was there in 2008, I was going for my first job. So September 15, I joined my job. And October 10th, there was another batch which was supposed to join after us. So we were fortunate that we were the last batch and we got our joining. And that October 10th batch, they got their joining after 1.5 years. They had to wait for 1.5 years because recession hit very badly in 2008. Mortgage subprime crisis actually happened. So this was a bigger. Now in that particular era, 2008, Lehman Brothers, which was one of the biggest bank of the US, that failed, that went bankrupt. So Lehman Brothers went bankrupt, but rumors in India followed like this, that ICICI Bank is going to go bankrupt also. They were the rumors. Now what happens is every bank has funds, CASA, which we call it CASA TD, current account, savings account, and term deposits, right? So this is the funds which a bank borrows from us, right? So these are the borrowed fund, and we can ask for our funds anytime we want. But the business of the bank is lending. So what bank does is bank borrows funds from us and it lends, right? This is what the business is. Lending, it has already gone to the customers. The money is with the customers, not with the bank. But borrowing, that is also gone, because borrowing, bank has taken borrowing and it has landed further. So practical scenario, bank is not having money, because bank has taken it from one side and given it on the other side. So practically bank doesn't have money. Now, because of this rumors, there were queues outside ICICI Bank that we want our money. Queues. So ICICI Bank went in a liquidity crunch. They didn't have money. So what they did is they borrowed money from different banks, or maybe RBI for that matter. Now, let's say the currency chest of the ICICI Bank is in Gujarat, Vadodara, right? And the liquidity requirement is throughout the country. How will RBI or ICICI manage in this case? So ICICI borrows from different banks who has their currency chest or currency vault in those particular cities or locations. So they borrowed centrally and got it disbursed at different locations. He gave us money, we'll get back to you, we'll give this money back to you, because banks knew that ICICI Bank is doing wonderfully good, and this is because of rumors. Not even a single person was there who didn't got their money from ICICI. Everybody got it, and that gained the trust, because RBI came in between and said nothing to worry about it. ICICI is robust. If anything goes wrong, I will be there to help you out. Then people started again depositing money into ICICI Bank. Otherwise, in 2008 was a difficult time for our ICICI Bank because of the rumors. So these sort of liquidity crunch or liquidity situations can come to any bank by any matter. Yes Bank had that issue when the Rana Kapoor was going out of the bank, and there was a lot of ruckus with the top management, right? So these things happens, and they borrow money. Or sometimes the ratio which they have to maintain with RBI, if anything goes up and down, the ratio also gets fluctuated for a day or two. For that particular time period also, they have to borrow and balance that ratios, SLRR or IRR, CRR, because if they don't maintain that ratio, then RBI will penalize them. So on day-to-day basis, they have to maintain that ratio. So day to day, by before the end of the day, they check what is the ratio. Are they closing at the proper level or not? And if not, then they borrow the funds. If they have surplus, then that is okay, right? Because ratio keeps on changing because of the daily operation situation, right? So so somebody has surplus funds, somebody has lesser funds. So the people or the banks who are having surplus fund, they park their funds with other banks who needs it. So this particular money market, and it is not that they keep on talking to each other. They talk to each other via money market. So ICICI Bank today, if wants funds, they will check in the money market that which bank is having surplus funds. So from there, they will get funds. They won't go, I mean, the MD, Bakshi Saab will not call every MD of the other bank कि भाई साहब fund है क्या extra मेरे को चाहिए 10,000 crore चाहिए है क्या तेरे पास मेरे को भेज. It's not like that. They go into the money market, they check if the funds are available, which bank or which institution is having extra funds, and they get the funds, right? Aid room for overcoming again short-term deficits. It is again money market provides the aid room, which we just discussed. Now, types of money market instruments. What all are the instruments which we deal in money market? Call money or notice money, treasury bills. I'm so sorry. Commercial bills, certificate of deposit, commercial papers, money market, mutual funds, repo and reverse repo and reverse repo market. So these are the instruments through which money market is being dealt. Let's see one by one what exactly are these. So call money, it is 15:30. So Anirudh, he is already gone or is there? Anirudh, you are there? He is there. Only Suraj has gone. So Anirudh, you just let me know when you have to go. We'll wind up the class accordingly. Okay, so call money or notice money. As per the name suggests, it is whenever you call back your money. Let's say Ananya ma'am is filthy rich. No, let's say she's actually filthy rich and she's having billions of dollars. If I go to her and I say I want 2 crore rupees, first of all, she'll ask her guard not to let him enter into the bungalow. He said कि ये अंदर नहीं आना चाहिए, बाहर रखो उसको, बोल दो नहीं हूँ मैं घर पे, right? But God forbid, his father says no, no, बेटा कोई बात नहीं, आने दो अंदर. So I say I want 2 crore rupees, and Ananya ma'am says no, no, I will not give. So her father says, "Nee, you should give it." So anyhow, I get 2 crore rupees instantly, right? The only condition is that I have to return back this money as and when I get a call from her or her father that we want our money back. That is called simple call money or notice money, whenever the notice is being set, right? So this particular money I'm asking for 1 day. So lending or borrowing for 1 day is majorly call money, because call money we are calling it. So in a day, at least अगर कोई पैसा लेके गया तो ऐसा तो है नहीं कि मैं वहां से पैसा लेके गया, गेट तक पहुंचा और मुझे कॉल आ गया, भाई साहब पैसे वापस करो. एटलीस्ट मेरे को जाके मेरा काम तो करने देंगे ना कि फॉर 1 day, okay, you do your work and next day I'll get a call कि return our money back. If not next day, then another day they have to wait. If the day started, then they have to wait for another day, let it mature for that day. So after the maturity of the day only we can ask for a call money, right? Notice money, it is the lending or borrowing for 2 to 14 days. And then we have term money, which is beyond 14 days. So anything which is maturing within a day, within 1 day, it is call money. Anything which is maturing between 2 days to 14 days, that means 2 days to 2 weeks, it is your notice money. And anything which is maturing beyond 14 days is your term money. Clear? Okay.
Yes, sir.
Yes, sir.
Good. What are treasury bills?
So can you go back to the previous slide?
Yes.
Yes, sir. You can go ahead.
Okay, thanks. So Anirudh has to go at 3:25. Okay, Anirudh, we will try to wind up by 3:25, another 5-7 minutes. 5 minutes. Then we have treasury bills. So treasury bills is issued by central government, central bank on behalf of government. Treasury bills and government securities both are issued by RBI on behalf of government. Why on behalf of government? Because during the budget session, government tells us what they will be expensing out on, and to do the expenses, to do the development of the country, they need funds, and they raise funds with the help of government securities and treasury bills. Right? Clear? They are also known as T-bills. Chai wala bill nahi, T-bills. Right? In short form. They do not yield any interest. So in bonds, what we understood is that bond has couple of terms fixed, which is the face value, maturity. Maturity is also fixed, face value is also fixed, then coupon rate is also fixed, that we have understood. But in treasury bills, there is no coupon rate at all. Now tell me, will you buy anything which doesn't have any interest rate? सो गए क्या?
No.
क्या सोए नहीं हो कि बाय नहीं करोगे?
Sir, no, sir. I'm not sleeping.
No, I can see you. You are awake, but I'm asking about the others. So, will you buy anything which does not have any interest rate? I mean, if you are lending money to me and I say that I won't be giving any interest onto it,
No, we wouldn't indulge in it.
then you will always ask, ki, what is the other thing which I will get in turn? Because if I'm investing something, I need some returns, right? So
Yes,
that
sir.
particular bond or treasury bill is actually traded at discount, issued at discount. So if the face value is 10 lakh, so probably the treasury bill might be issued at 9,50,000. That 50,000 is your return, because at the time of maturity you will get your face value back, right? Issued
Right.
at discount and repaid at par at the time of maturity. No risk of default. It is the safest instrument because there is a backing of government, so there is no risk of default. Treasury bills and government securities, they cannot default. If they default, then country में टाटा बोल के सीधा कनाडा चले जाना, right? Then there is a certificate of deposit similar to that of the promissory note. Bearer of the certificate of deposit receives interest, same as bonds. जिसके पास भी होगा, that person will receive the interest. Maturity date, rate of interest and values are fixed, like bonds, generally between 3 months to 5 years. So the difference only comes in the terms of maturity. When they are issued, they have lower, you can say, maturity periods. Though they go up till 5 years, but again, they have the lower maturity periods. Okay. Commercial papers. So first commercial paper was issued in 1990. usually known as promissory note. Promissory note भी बोला जाता है इसको. Unsecured and are generally issued by companies and financial institutions. So certificate of deposits are issued by usually financial institutions. Commercial papers are issued by corporates also, along with the banks and financial institutions. And here these instruments are unsecured. They are not backed by any security, any asset, anything. They are unsecured. Like personal loan, what we get from bank, that is unsecured. If we default, bank cannot recover that personal loan money from anywhere, because that is unsecured loan. If we get home loan, the home loan is secured by home, by guarantee of the person. But personal loan, that is not secured, that does not carry any security for the bank, right? Issued for financing of inventories, account receivables, and settling short-term liabilities or loans. So corporate, we understood while starting that corporate borrows money for two reasons. One is for short-term requirement, one is for long-term requirements. So commercial papers help in for short-term requirements. So any corporate who requires money for their working capital, they can issue commercial papers and get their working capital finance from commercial papers, right? Provided as per the rating, they are allowed to. The return on the commercial paper is always higher than that of the treasury bills. Why? Because treasury bills are the safest. And if anything is coming with the security, definitely it will be charged on the premium. If there's a premium, then definitely returns will be less. Correct? Companies which have a stronger credit rating usually issue commercial paper as they are not backed by collateral. Since they are not backed by any collateral, so any company cannot issue commercial paper. So all the corporates which are having their credit rating AA plus and AAA, they only issue commercial papers. For that matter, only AAA rated companies are allowed to issue commercial papers, because this particular instrument is not backed by any collateral, and the credit rating itself can take a guarantee that, okay, this company is AAA, this company has a lesser probability to go into default. So your return of capital has a higher probability and is more or less in the safe hands, right? Then money market mutual funds. It was introduced by RBI in 1991. Open-ended mutual funds. It works similar as to mutual funds. Ananya मैम, श्रीन मैम, एल्स्टेयर एंड सूरज तो गायब ही हो गया ज्वाइन करके. आप चारों ने उस दिन म्यूचुअल फंड्स डेट का वो अटेंड किया था. उसमें भी डिस्कस्ड अबाउट इट, ओपन एंडेड एंड क्लोज एंडेड फंड्स. So open-ended funds are nothing where you can enter and exit anytime you want. Whereas closed-ended funds have a specific window at which particular time they open. You can invest or exit at that particular window only, otherwise you cannot. Or it will come into at the time of maturity. So once you enter, you cannot get out in between. Right? So that is close-ended. Open-ended, anytime you can hop in, hop off. So like toy trains, if you might have gone to the Shimla or Calcutta for that matter, if you might have enjoyed the tram, you can hop on, hop off anytime you want. But in an express train, you cannot hop on, hop off anytime. Only when the train is still at a station, you can hop in, hop off. Otherwise, you cannot. In these toy trains and these things, you can hop in, hop off anytime, whenever you want. So in the same way, open-ended and close-ended. Open-ended are like toy trains. You can come in, get out. Definitely, there is an exit load. If it is a commitment, then there is an exit load attached to it. But usually that is taken for 1 year, and beyond that, you can always stay into it. Objective of these mutual funds is protect capital while acquiring a nominal yield. Why mutual funds of these money market work better? Because they give you better yields compared to the savings bank account. So people, instead of keeping money into savings bank account, love to keep their money into the money market mutual funds, because they get higher returns compared to the savings account returns. Got it? Maturity is less than 1 year. So mutual funds money market are less than 1 year. So if, let's say, you have bought your mutual fund today. Today is 9th of September. The maturity of your mutual fund, money market mutual fund is on 8th of September. That does not mean that this particular fund will get closed. So these funds are always on the rolling over basis. So what happens is, on 8th of September, if you did not withdraw your money from that particular fund, so by default, your money will be reinvested for the next year. Reinvested in the next series. By default, it will be reinvested. Unless you take back your money, it will keep on reinvesting. Same happens with the liquid funds. Same happens with the short-term funds. Same happens with the ultra short-term funds also, that they keep on reinvesting unless you ask back your money for. Got it?
Yes, sir.
Repo and reverse repo market, I believe it requires a bit more time, and Anirudh has to go. So shall we wind up our class today for in 1 hour, or let Anirudh go and we continue what is to be done?
Anything works, sir.
No, anything works for me. Anirudh, what you want? Is he there or gone? Anirudh, you are there? Looks like he has gone already.
So he's there in the participants.
No, he's there in the participants, but not answering. So Ayan and Harsh, and he's written some message. Okay. If you want, you can continue. I can watch the recording afterwards. Guys, you tell me quickly what you want to do. Our choice is all yours.
So maybe we can wrap it up in an hour.
So you want me to wrap it right now? I mean, wrap it up right now. That is what you're
Yes,
saying?
sir. Yes, sir.
Highly disinterested people. Not good. Chalo. Anyways.